Let's get out to Dan. He joins us with more from Abu Dhabi. Dan, this seems to be a strategic move in some ways ahead of the midterms for the president, but also designed to send a message to OPEC Plus.
That's exactly right, and it comes at a time when OPEC is preparing to meet later today. So how this changes the calculus for the producer group remains to be seen. Karen, we need more clarity on the exact volume, the duration and the structure, but this reported 180 million barrels would be the largest release we've ever seen from the SPR. So first, on volumes, this is going to be the third time that the United States has tapped its strategic reserves in the past 6 months. The two previous releases were worth 30 and 50 million barrels, but the market saw them ultimately as a drop in the ocean. So this would be seen as a considerable increase to offset those lost Russian barrels, which explains the leg lower that we are seeing in prices right now. At the same time, what's unique about this reported plan is the duration. Traders will ultimately want to know as well how quickly the US can deploy this release and for how long it plans to keep the tap open, with reports suggesting that we could see 1 million barrels of oil per day coming to the market over the next 2 to 6 months. So the duration is critical here. And then the other factor is the structure and whether this is going to be an exchange of barrels as we've seen in the past, or actual oil sales. We also don't know if the US plans to act unilaterally or if this release is going to be aided by Western allies as it has been in the past. So a few unknowns here. I've been speaking to analysts about the overall market impact this morning. Ed Bell at Emirates NBD told me today that this could actually add to a bullish case for oil, with the market remaining tight and supplies looking thin. Here's what he told me earlier. Listen in.
For the longer term, though, I do think this is a bit of a risky strategy for the U.S. to draw down on its SPR so heavily. If you think that we're going to be going into the more heavy use summer months in the United States, you're going to be drawing down your inventories just as you're going to be needing them in a time of uncertain supply conditions. And then going forward, if we do face a oil market that is more or less structurally in a deficit for a prolonged period, drawing down on those reserves as well could help underpin a bullish case for oil prices over, say, a 12 to 24-month period.
Ed Bell speaking to me earlier. And as you say, Karen, this headline comes just hours before OPEC Plus producers prepare to meet later today. The US and its allies like the UK have been urging OPEC Plus to boost output, but they have been hesitant to help. The UAE and Saudi Arabia, for example, want security guarantees from the US, with the Iran deal still lingering in the background, and other producers also have spare capacity issues. So OPEC is unlikely to respond in this moment. What we have heard is that the producer group is likely to continue to stay the course here, that is pushing out 400,000 barrels per day to the market as of next month, and resist calls from the US and the West to do more to aid what is prices tracking at multi-decade highs. So what happens next? The president is expected to speak in the coming hours to unpack this plan. And of course, oil prices hang in the balance. We are seeing downside here. Brent off by almost 5%. WTI also down by around 5%. It's back over to you.